And no, I won't fade away. These the type of moments I embrace. How it feel to keep blowing right up in your face. How it feel to keep knowing you ain't got a base. I got fans and no worry about getting placed. And they tryna know my whereabouts where I stay. How it feel to keep blowing right up in your face. How it feel to keep knowing you ain't got a base. I got fans and no worry about getting placed. And they tryna know my whereabouts where I stay.
Dude, you don't know how hard it was for me to pause that song, man. But of course, we back with another video, man. I'm excited to be here. We got some stuff I want to talk about, man. But before we do that, you already know, if you haven't subscribed to the video, I would greatly appreciate it. If you haven't subscribed to the channel, man, please do. If you like this video, please give this video a thumbs up. And man, if you want to drop comments in the video, do all that, man. I'm trying to get to these algorithms, dude. I'm trying to get to these algorithms. But yeah, I want to talk about today. I just mainly want to talk about why I like option trades better than just buying the stock straight up and just purchasing the stock straight up. Why I like option trades better than that. But yeah, that's basically what I want to cover today. And before I begin, again, this is just my opinion. I'm not going out there. I'm not telling you to go do option trades. I'm not recommending that you do that because I don't want y'all talking about y'all lost money and stuff. This is just my personal opinion on why I think option trades are better than just buying a stock straight up. And eventually, man, I want to do like a course. I'm going to start a course. I'm going to put together PowerPoints for y'all and stuff. I'm waiting to get like a graphics card for that, but I can't get that graphics card unless y'all subscribe to the video. If y'all help me, I'll help you in return, man. So once I get that graphics card, I'm going to start streaming from my computer. And I'm going to start from the basics. If you ever just want to get your feet wet in the stock market, I'm going to teach give my knowledge on how I think is the proper way to invest, the type of brokerages that's out there like TD Ameritrade, Robinhood, Fidelity, E-Trade, and what you should be looking for when you're going to choose a broker, the different types of accounts there are to set up, brokerage, IRA, Roth IRA. We're going to go over the benefits of all of those and the downsides to all of those. And then I'm also going to talk about like how to purchase a stock, what stocks are, or how to determine what's a good company for you to buy, and how to determine the price to get in when you're buying a stock, how to determine the selling price. And we're going to start literally from the basics, and we're going to work our way up. And you know, this video, this channel is specifically here for education. This channel is here for motivation. This channel is here for inspiration. And you know, I'm just showing you that if you stick to it, if you don't change up, if you stay disciplined, man, if you stay motivated, you will get there. You will get to the place that you want to be. And I'm gonna be living proof of that. This is why these videos are here, because I'm showing you my progress and my journey, because I'm not where I want to be yet, but every day I'm seeing progress, and I'm just showing you, and I'm gonna be living proof of that you can do what you want to do if you just stay determined, you stay focused. Of course, there's gonna be obstacles on the way, but what's the journey if it's too easy, man? It wouldn't be fun. The end result wouldn't be so satisfying if it wasn't so hard to get there, if it wasn't difficult to get there. But this is why these videos are here, man, and this is the purpose of this channel. So this is the most diversified YouTube channel that you will ever see. So if you haven't subscribed, man, you have to. Like, you literally have to. It's something that you should do, because like I said, this channel is so diversified. I'm going to be talking about my music journey. I'm going to be talking about these stocks, and then I'm going to be talking about a whole bunch of stuff that just goes on in my life. We all feel the same emotions, man. We all kind of go through similar things, similar emotions. So I'm gonna be living proof of that. We gonna be able to do it, man. And if y'all want to come through this journey on with me, man, and subscribe and just follow it, and then we could, you know, have discussions and stuff. But without further ado, I'm gonna break down like what an option trade is and why I like it as opposed to just purchasing the stock straight up, right? So let's just say in this example, right? Microsoft is not actually trading at 100, but this is what I'm gonna just use for this example, okay? And again, I'm not telling you to go out to buy Microsoft. This is just solely used for this example, all right? So let's say Microsoft is trading at $100, right? One share of Microsoft. If you wanted to buy one share of Microsoft, you would need $100 because Microsoft is currently traded at $100. And again, this is not actually the current trading price. This is just for the purpose of the example. So let's say an example, Microsoft is trading at $100, right? So you need $100 to buy one share of Microsoft. you need $200 to buy 2 shares of Microsoft. So how much money would you need to buy 5 shares of Microsoft? Well, of course, you need $500, right? So let's say you spend $500 to buy 5 shares of Microsoft. So now you spent your $500, you now own 5 shares of Microsoft, right? Now, as opposed to an options contract. Now, when we're talking about options contracts, there's things that you're going to be looking at. It's called the premium, it's called the strike price, and the expiration date. And of course, there's other things that you can look at, but for this video, we're just literally going to cover the basics of stocks. Then there's two types of stocks, options. You have calls and puts, but we're basically just going to be going over calls today. This is literally just the basics of options. Puts are basically when you're betting on the stock to go down, and calls are basically when you're betting on the stock to go up. But for this purpose of the example, we're just going to go over calls, and we're literally just that. So when you're looking to get into an options contract, the first thing that you're going to be looking at is the premium price, right? So the premium price is the price that you're going to pay up front to get into the options contract, right? So when you just bought the, without the options, if you would have just buy that stock straight up, you spent the $500, you bought 5 shares of Microsoft at 100, right? With the options contract, there's going to be a premium price. And that premium price is going to be a bid and it's going to be an ask. So the bid price is what the buyers are bidding for the contract, and the ask price are what the sellers are asking for. So if the bid is $4 and the ask price or what the sellers are asking for is $6, then that most of the times that options contract price is going to be right in the middle of those numbers. So that premium price is going to be $5, right? So remember, bid is what the buyers are bidding for it. They're bidding $4 in this example. Sellers are asking for $6, so it's going to be $5. The number right in that middle, that's how much that options contract is going to be if you wanted to buy it. Okay? So, and then secondly, remember I said strike price. Strike price in the options contract is basically just what you're betting or predicting the stock price to go to by that expiration date. So if we look at it in this term, in this example, we're betting that, or we're predicting that Microsoft will reach $150 by January 2023, right? We're currently in May, and we're betting that Microsoft will reach $150 by January 2023. And remember, it's currently traded at $100, right? Remember, right now it's trading at $100. So if you wanted to get into an options contract on Microsoft, you would pay that $5 premium up front. Remember, that $5 premium came from the $4 bid price, the $6 ask price, the number right in the middle, that's how much the contract is going to be. So we're paying $5 to get into this options contract, right? But here's where a lot of people get confused. All options contracts come with 100 shares. All options contracts come with 100 shares. So if we wanted to get into an options contract for Microsoft and the premium is $5, well, how much is that really going to cost us? Well, there's 100 shares in every options contract. So that 5 premium price that we're paying is going to be 5 times 100, which will come out to $500 that we're going to pay up front just to get into the options contract of Microsoft, right? So as opposed to just paying that $500 for the 5 shares of Microsoft, now we're paying $500 to get into an options contract. And remember, our strike price is $150. So we're paying $500 and we're predicting that Microsoft will reach $150 by January 2023. And remember, every options contract comes with an expiration date. You can do a week out, you can do a month out, you can do a year out, or even 2 years out sometimes. So that's usually what you're looking at in terms for options. Now, here's why I think options are better. So let's say we're going back to the first scenario where you just buy the stock straight up. You bought those 5 shares at $100, so you now own 5 shares of Microsoft, right? You spent that $500, and now you own 5 shares of Microsoft at $100. Let's say Microsoft goes to $105. Okay, so if you were to buy that stock straight up, your profit will be $25 because remember, you bought Microsoft at 100, Microsoft went to 105. That's a $5 profit, but you have 5 shares, so that $5 profit is multiplied times 5, and now you have a $25 profit. Now, that's still a good profit, right? $25 profit. I'm not complaining about any profit. I don't care if it's $1. But as opposed to the options, let's say the options contract goes up $1 for every time Microsoft goes up $1, right? So remember, your premium, you bought it at $5. So let's say remember, Microsoft was trading at 100 when you bought that premium. So let's say the price of Microsoft goes to $105. Well, your options contract is going to go up $1 every time Microsoft goes up $1. So it went from 5 to 10. So remember, Microsoft went up $5, your options contract went up $5. And remember, in the options contract, there are 100 shares in every contract. So your options contract really went from $500 and now it's worth $1,000, because remember, 5 plus 5 equals 10. So your options contract, it went from being worth $5 to $10. And remember, there's 100 shares in every contract. So now your contract is worth $1,000, or $10 for the premium price, 10 times 100, because there's 100 shares. Your options contract is now worth $1,000. So in the options contract, you made that $500 profit, as opposed to just making that $25 profit buying the stock straight up with the same amount of capital spent. You spent $500 in both scenarios. And this is why I like options better. But there is a downside to this. So let's say if the trend was flipped. Let's say if Microsoft went from $100 to $95. Well, if you bought that stock straight up without doing the options, you'll be down $25 or negative $25, because you bought it at 100 and now it's currently worth 95. If you did that option trade, it's going to be the exact opposite of what the option would do in that first scenario, and it'll go down. So now it will basically be down $500. And that's where options kind of scare people, because they're so volatile. They can move in either direction depending on the stock. But that's why I personally do long-term option trades, because stocks have bad weeks, stocks have bad months. You never know what's going to happen in that week. You never know what's going to happen in that month. If you're doing a trade for like a week expiration date or a month expiration date, well, that time is really not on your side at that point. So that's why I personally like to do long-term option trades on good quality companies, or specifically exchange traded funds, or ETFs. ETFs, remember, are funds that hold multiple companies of a specific sector or a specific index. And even if 2 of those companies are performing bad, well, the other 8 or top 10 holdings of that company, the other 8 companies are going to take that ETF and raise its value and its price. So that's why I like long-term option trades on quality companies and ETFs. Now, again, I'm not telling you to go do this. I'm not recommending that you go do this. This is just my personal opinion. And that's why I like option trades better than just buying a stock straight up. And I still do both. I'm in options, and then some of my positions are still in regular stock holdings. So I currently do both. It's good to have a diversified portfolio. I don't think it's good just to have all options, and I don't think it's good just to have all stocks. I personally have a mixture of both. All right. And then secondly, I also want to get into what kind of week we had in this market, man, because this market was crazy. I believe Monday through Wednesday, the NASDAQ was down, and I think the Thursday and Friday before that, it was down as well. So the NASDAQ had like 5 negative trading days in a row until Thursday, and today it broke that losing streak, and it kind of turned positive. But so what I've kind of been noticing is like a sector rotation in terms of where institutional investors and where a lot of these investors are putting their money. And what I mean by sector rotation is, well, you have your technology companies like Apple, Microsoft, Google, Amazon, who all killed their earnings. And remember, there's 4 quarters in a year, so there's always going to be a earnings report every 3 months or so to just see how the company did in the previous quarter. And of course, all the tech companies that I just previously named, they blew out their earnings. They brought in more revenue than people expected they were bringing in. And usually in those cases, it could go either way. If you see a company kind of blow out earnings, it's like, man, you would think like, all right, everybody's about to start putting their money into these companies. They're going to start buying these stocks. What does that mean when there's more buyers than sellers? Well, the value of the stock is going to go up. So you would think like, all right, Apple just blew out their earnings. I'm about to see like at least a 3% increase in their stock price. Same thing with Microsoft, same thing with Google. That's what you would assume, right? Well, it was quite the opposite in some of these cases. Not all of them, but some of these cases where you see these companies report good earnings, and then these sellers start to sell their stock. And they're selling their stock because they're taking a profit. They bought it at a price a long time ago, and now they see that price rise. They just saw that the company blew our earnings. They're going to take profits, wait for the stock to drop back down, and they're going to get back in. And right now, we've been seeing kind of a rotation from technology stocks to energy and financial stocks. And the reason why we've been seeing institutional investors and investors putting their money into energy and financial stocks is because they believe that the economy is opening back up, is getting back to where it was pre-pandemic. Even though the jobs reports that just came out was kind of iffy, it wasn't kind of what they expected. But they expect that the financial sectors like banks and the energy sector, energy companies, oil companies, they expect the gas prices to go up. Oil companies are going to start being more profitable, and they expect banks to start being more profitable as the economy opens back up. And that's why they're putting their money there. Even though the Fed continually says that they're not going to raise interest rates until 2023. And remember, banks make a lot of their money from interest rates. When you go into the bank and you apply for a car loan or a house loan, and that you have to pay that back with interest, that's how banks make their money, through the interest rates. And right now, interest rates are at zero. So the Fed is saying like, hey, we have a target inflation, and until we meet these target goals of how the economy is coming back up, we really don't plan to raise interest rates until 2023. So I'm like, okay, why are these institutional investors still putting their money into banks if they're not going to raise interest rates until 2023? And another point that I saw was that banks are actually going to start being able to buy back stock in June or July. I'm not sure if that's why investors are putting their money there, but they just been putting their money into banks and energy. So if you're a trader or a swing trader, all you got to do is follow the institutional money. You know, I feel like the financial sector is going to have a little bit more of a good run before it kind of calms down and switches back to that technology sector. But the technology sector is really what's going to be rolling like the next years, in my opinion. Semiconductor industry, lithium industry, artificial intelligence industry. I think those are the sectors that's really going to be doing what you're doing. And again, I only encourage long-term investments. I'm not encouraging you to trade, and I'm not encouraging you exactly what to invest in. I'm not a financial advisor. Again, this is just my personal opinion. And that's basically what's been going on in the stock market this week. Like I said, the Fed has continually said that they're not going to raise interest rates, but people are still putting their money into the financial sector. And I'm not complaining because I'm personally positioned in the financial sector ETF, XLF, and I've been positioned in it for about, I think, since February or March. And the reason why I did it in February or March is because I thought that the Fed was going to raise interest rates, let the banks raise interest rates, soon, like right now in May and June. I thought that's when they were going to start raising interest rates, because I assumed the economy was going to start opening back up sooner than what it is. And I'm like, oh, banks are going to start raising interest rates again this year. Well, that means they're going to be more profitable. Let me get in them. And this ETF that I have holds like Goldman Sachs, JP Morgan, Wells Fargo, Citigroup, all the major banks. And I'm like, okay, well, if the economy is about to open back up, interest rates are about to go back up, banks are going to be profitable. Let me do this kind of swing trade option play. And like I said, I'm not complaining that their money is in the financial sector right now, because I'm in XLF. And all I'm saying is, if you looking at an asset that you want to buy and it's continually on a long-term trend that's going up, if y'all see that thing dip, if y'all see that thing go down, that's letting you know that it's at a discount, man. And you better buy, man. Because a lot of these tech stocks that fell off, dude, I went ham, bro. Like, I loaded up, man. I'm telling you, I stocked up on these stocks. And like I did, man, I love when tech stocks dip. Just the opportunity to buy, I love it, man. I hate buying stuff when it's high, and that's why I don't do it. And that's where the discipline comes in. You got to have discipline both ways. You got to wait for those stocks to come off those 52 weeks highs. If you see stocks that are currently hitting 52-week high after 52-week high for the past month and the past 2 months, you don't want to buy it then. And you might be like, oh man, I missed out on this money. Well, if it's having these highs, it's going to come down hard. Like, if it's constantly hitting these highs and highs, it's going to come down, because people are going to take profits at one point. Same thing with the cryptocurrency. Ethereum has been killing it, man. Ethereum has been killing it. And I'm like, man, I need to start looking at when I'm going to take profit, because, again, it's a long-term investment for me, but I know Ethereum is going to crash down hard. I don't know when, but at one point, sellers are going to start taking their profits. And when they do, it's going to have a hard crash. When it has a good bull run like that, you usually see that it has a kind of hard crash coming down when sellers take their profits. And again, when I see that, you know what that signals for me to do? I'm a buy. I'm a buy. And another sector that I haven't mentioned where people have been putting their money is cryptocurrency. That's why you see a lot of these cryptos, Doge going crazy, Bitcoin going crazy, or Bitcoin kind of ain't been going crazy that lately, but Ethereum been going crazy. And that's where you see a lot of institutional investors and investors putting their money. A lot of these hedge funds, they putting their money in the financial, energy sector, and in the cryptocurrency as well. But when that sector rotations happens again and gets back into tech, boy, it's gonna be something crazy. It's gonna be something crazy. And that's the exact reason why short-term plays are kind of riskier, because you never know what might happen, what kind of rotation might happen. So that's where I'm at with that. And that was the whole thing of why I think options are better than buying a stock just straight up. And again, for my visual learners, if you still was kind of iffy about it, I'm going to start making these PowerPoints and stream it from my computer so you can see exactly what I'm talking about. And it'll probably make it easier for you. So again, if you want that, you got to subscribe to my video. But honestly, as I'm speaking right now, I really don't even need a graphics card. I could low-key find a way around that. So that's what happens when you just start talking out loud, man. You start thinking of ideas and stuff. So I low-key don't even need a graphics card, but it would still help if I could get one. But y'all can subscribe to the video, man. And then lastly, of course, we got to talk about the music. As you can see, man, I'm still mixing these songs. I know it's taking some time, but I just want good quality music to be released. I want y'all to enjoy the music. I want you to hear every single instrument clearly. I want my vocals to be heard very clearly. I want all the frequencies to be in mesh. I want everything to sound like it was recorded in the same studio. And I know that sounds easy, but it's not. As you can see, I've been putting in a lot of work on these songs. I still got to finish mixing this song. I'm almost done with the mixing part, and then I'm going to get to the mastering phase. The mastering phase is kind of my favorite part. It's kind of the easiest part to me. And that's where you see all this work at. Got to finish that final EQ, final compression. I already did the final compression pretty much, but basically the final EQ is where I'm at with it. And then I got to make a couple other instruments fit into the mix. But after this song, I got a few more that I'm doing on the tape, and then it's going to be here, man. All I ask for is patience. I ask that y'all just stick with me. I ask that y'all continue to support, man. I love the support that y'all give me. It really keeps me going, man. It means a lot. When I see a lot of y'all hit me up in the DMs and, really giving me that support, man, I love it. I appreciate it. You don't know how much it means. I know that I always say, like, man, I appreciate you in the DMs, but I really mean that. Like, I really appreciate y'all. Y'all the ones who support me, man. I promise it helps. I promise it helps. I'm a dude built off of good energy, so when I get good energy, it just helps me elevate. Like Goku with the spirit bomb, man. All y'all spirits coming in, I'm like, man, I love it. Y'all the ones who keep me going, and I really appreciate y'all for real. So, like I said, man, if you haven't subscribed, man, I don't know what you're doing. This is the most diversified YouTube channel that there is out there. So you gotta subscribe, man. You gotta like the video. I appreciate y'all watching. There's gonna be more content coming soon. Again, I'm gonna be doing PowerPoints and stuff for my visual learners. If y'all have any questions, feel free to hit the DMs. Y'all know where I'm at, man. Stay tuned. I'm out.